Welcome to Uncovering Trusts, a podcast by the Edison Group, a content-led IR business integrating analyst content, digital targeting, and investor engagement. Each episode will uncover the distinct features and latest developments of a select listed investment company. So tune in to find interesting investment ideas and to stay on top of what's happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Miloš Paps, Director of Investment Company Content at the Edison Group, who will talk about Canadian general investments today. Miloš, thanks for joining us.
Yeah, thanks for having me. Let me maybe start with a high-level introduction to CGI. The fund was established in 1930 and is North America's second oldest closed-end fund, listed on both the Toronto and London stock exchanges. Greg Eckel at Morgan Main and Associates has managed CGI's portfolio since 2009, aiming to generate a better than average total return from a diversified portfolio of North American equities via prudent stock selection and timely recognition of capital gains and losses. While most of the fund is invested in Canadian companies, up to 25% may be held in US listed businesses, which are primarily in niche operations or areas that are underrepresented in the Canadian market.
Okay, thanks for that. And what is the manager's investment strategy?
Yeah, so Eckel believes that CGI can be considered as a one-stop shop for investment in Canada. He has an unconstrained approach within the remit that a maximum 35% of portfolio may be held in a single sector, and the manager invests without reference to the sector weightings of CGI's benchmark, meaning the company's performance may differ meaningfully from that of the S&P TSX Composite Index. Stock selection is primarily on a bottom-up basis, although Eckel does take the macroeconomic environment into account. The manager seeks reasonably valued companies with favorable fundamentals and strong management teams, and also takes ESG credentials into account. CGI's portfolio typically has around 60 holdings, with a bias to large and mid-sized stocks. Some of these are higher yielding, such as the Canadian banks, for example, helping to support CGI's own dividend payments. A notable feature of the fund is its low turnover, which averaged 6.8% over the last 5 years, implying around a 14-year holding period. However, positions are reassessed regularly to ensure they are sized correctly and investment cases are still valid.
Right. And so a natural follow-on question would be to ask, has the strategy been successful?
Yes, it has indeed been successful. CGI has an enviable long-term performance record. Over the last 25 years, it has outperformed the Canadian market by an average 1.4 percentage points per year. And the 50-year record is even better, with an average annual outperformance of 2.3 percentage points. Now, more recently, CGI has generated solid outperformance versus its benchmark over the last 5 and 10 years, although performance was hampered in 2022 by its underweight energy exposure, which has negatively affected the company's 3-year numbers.
So now would be a good time to discuss the structure of CGI's portfolio. Can you shed some light on that?
Sure. As noted before, Eckel invests without reference to the benchmark's sector weightings. There is a long-standing major underweight position in financials, which makes up around 30% of the Canadian market, as the manager finds better opportunities in other areas. The fund has also been underweight energy for many years, although Eckel is now viewing the sector more favorably, as he believes that commodity supply-demand balances are in better shape and the major operators are returning more cash to shareholders. Hence, CGI's energy weighting is moving closer to the index. In terms of overweight exposures, there is an above-index weighting in technology, which has been beneficial to the fund's performance. Within the top 10 holdings are US-listed NVIDIA and Apple, which, of course, have made significant positive contributions. NVIDIA is CGI's largest position at 8% of the fund, and its stock price has appreciated by around 9 times over the last 18 months, helped by the growth in artificial intelligence, obviously. However, it is interesting to note that CGI is not new to the party, so to speak, as NVIDIA entered the portfolio in 2016, when its semiconductor business was more cyclical. Between then and the end of 2023, Eckel has realized $96 million in profits. He views the company as having a very strong management team and a competitive edge that has transitioned into higher growth industries, including gaming, data warehousing, and AI. CGI also has a notable overweight exposure to the diverse industrial sector.
Right, thank you. And could you highlight a couple of recent portfolio transactions?
Yes, absolutely. As mentioned earlier, Ekel has been adding to CGI's energy exposure. This includes two new holdings in uranium producers. Cameco is the world's largest publicly traded uranium company. It produces very high-grade uranium from its flagship McArthur River and Cigar Lake mines in the Athabasca Basin in northern Saskatchewan. The uranium industry has a, complicated and checkered past in terms of success, which has deterred some investors. However, increased demand for nuclear fuels in an environment of decarbonization and energy security may lead to a change in perception. Governments are reassessing their country's nuclear energy capabilities in terms of extending plant lifespans, restarting idle capacity, or considering new builds. This higher demand could lead to a uranium demand-supply imbalance in coming years, especially as an extended period of lackluster uranium pricing has deterred investment in new industry capacity. Now, the matter considers that with rising geopolitical tensions and a favorable uranium industry outlook, Cameco looks very well positioned either as an ongoing enterprise or as an acquisition candidate. Then NextGen Energy was also added to CGI's portfolio. The company has a major very low-cost uranium resource, which is the highest grade in the world, and production is scheduled to start in 2029.
Thank you. That sounds really interesting in an area that I'm sure a lot of investors would want exposure to. So you've given a really interesting rundown on CGI. Are there any other features that investors should be considering?
Yes, I believe there are three areas that we should focus on: the dividends, gearing, and valuation. CGI pays regular quarterly dividends. Starting in 2018, the annual dividend has increased by 4 Canadian cents each year, and there have been no special dividends. The company's 10-year record of higher dividends means that CGI now qualifies as one of the AIC's next generation dividend heroes, which are funds with 10 years but less than 20 years of consecutive higher annual dividends. Given CGI's very high level of unrealized gains, Ekel believes that the strategy of rising annual dividends is sustainable. Now, moving on to gearing, the company has employed a leveraged strategy since its first issue of preference shares in 1998. In June 2023, the last tranche of preference shares was redeemed, and for economic reasons, CGI increased the amount borrowed under its margin facility rather than issue new preference shares. It now has a 175 million Canadian dollar facility, which equated to a net gearing position of around 12% as the end of May 2024. Finally, CGI has a persistently wide discount, which is currently around 40%. This may partly be due to the limited free float, as 52.5% of the share base is held by inside owners. The company is unable to repurchase shares to help manage the discount, as this would invalidate its favorable Canadian Investment Corporation tax status. It should be noted that there have been brief periods in the past when CGI's shares traded at a premium to net asset value, while they traded very close to par in 2006, a period when the company outperformed its benchmark and there was a commodity super cycle and a rising oil price.
Right, thank you. It's been a very comprehensive insight into this really interesting fund. It's got such a long outperformance track record. Looks like that could well continue. So you've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about CGI and other investment companies we cover, please visit www.edisongroup.com. Thank you very much.